Index fund investing is super easy, it is extremely effective, and in most cases it actually ends up beating the profits that professional investors are making. Just listen to this. According to a study made in 2022 that covers a 15-year period, well then 90% of professional investors did not even beat the market return. Put simply, well then 90% of professional investors are actually making a smaller return on their investments every single year than you and I are by simply just buying and holding an index fund. The greatest investor of all time, Warren Buffett, is also a huge supporter of index fund investing and believes that index funds are the perfect investments for everyday investors just like you and I. All of this raises the question of what is an index and why is it so effective? When you buy an index, you are basically buying a basket. And within this basket, there is a lot of stocks. And the stocks that are within your basket, well, that depends on what index you buy. You can, for example, buy an index fund called the S&P 500 index. And then you basically receive a basket that contains 500 stocks. And those 500 stocks are, of course, the 500 stocks that are within the S&P 500 index. You can also buy a different basket that contains all the stocks there is within the US, both small and large companies. But you can also buy index funds within different segments of the market. For example, you can buy it within gaming, within VR, and so on. There's a ton of different index funds that you can buy and that are available for you. Therefore, by only buying one basket, you actually get the diversification benefits there is of having several hundred companies within your stock portfolio. If you were to go out and buy all of the stocks that there are within the S&P 500 index, well then you would actually have to pay more than $90,000 doing it. And it would also take you a lot of time doing it. Therefore, it is much more effective to just spend a couple of $1,000s on an index fund and thereby get all of the stocks there is and spending less money on it, because not everyone can go out there and afford spending $90,000 on the stocks that are within this index. And that is why investing into index is extremely beneficial. Index investing is one of the best ways of getting rich. However, it is not a get rich quick thing. It is long-term investing. So don't expect to wake up the next day after having bought an index and become a millionaire, because that is not gonna happen. However, if you do stick with it and you are consistent with investing into index funds, well then you most certainly have a high chance of actually becoming a millionaire one day in your life. I am now going to give you my top 5 index funds that I would highly encourage you to look more into. These are the index funds that I've made the majority of my money with. However, before I get any further, I would highly encourage you to like the video if you actually like the video, and subscribe to my channel if you want to see more videos like this one in the future. With that being said, then let's start talking about my top 5 index funds. The first index on my list is the Vanguard 500 index, named the VFIAX. This index fund is basically tracking the S&P 500 index, and the S&P 500 index does of course consist of the 500 largest companies within the US. You have most likely heard of the S&P 500 index before, and there is a very good reason for it, because it is actually one of the best investments you can make. By buying this index fund, you get to be a small shareholder in companies like Apple, Amazon, Nvidia, and many other companies within the US. The S&P 500 index has on average given the investors between 8 to 10% every single year for the last 40 years. That is an extremely good amount of return every single year. However, it is nothing crazy compared to certain things such as cryptos and so on. However, it is a very stable and very safe investment to make, and therefore it is considered being one of the best investments there is. If you had invested $10,000 into this index 10 years ago, then you would today have had almost $40,000 without having done any work at all. It almost sounds too good to be true, and there is actually also a very small catch with this investment that you should be aware of. The minimum investment for this index fund is $3,000. So if you don't have those $3,000 up front, well then you cannot invest into this index fund. And there is also a yearly expense that you have to pay for owning this fund. You have to pay 0.04%, and the expense here goes to covering all of the work that this company is doing for you when it comes to buying and trading all of these stocks and thereby making you money. It is a very, very small fee you have to pay, and it is definitely worth it. I have a very large amount of money within this index fund, and I know very many others who have the exact same thing. The second example of an index fund that I have is the VTSAX. And unlike the first one that gave you exposure to the entire S&P 500 market index, well then this one gives you exposure to even more companies, because this one gives you exposure to all of the companies there is within the US, both large and small companies. This means that for the price of this index fund, you basically get exposure to more than 4,100 companies. This index started 20 years ago, and ever since that it has returned an average yearly return of 8.22%. If you had invested $10,000 into this index fund 10 years ago, well then you would today have had $36,000. When it comes to this index fund, there is the exact same catch as there was with the previous one, namely that you need a minimum investment of $3,000 and there is a yearly average expense of 0.4%. The third example of an index fund that I have is the VTIAX. Unlike the other two that gave you exposure to all of the companies that there are within the US, well then this one gives you exposure to all the companies there are in the world, excluding the US. So by buying this index, you actually get exposure to all of the emerging markets there is. This index is extremely good when you combine it with the index that gives exposure to the US, because then you do get the largest diversification benefits that you can possibly have. By buying this index, you actually get exposure to more than 7,800 companies. The average yearly return for this index fund is around 6.8%. And if you had invested $10,000 into this index fund 10 years ago, well then today you would have had just around $20,000 without doing any work. As you most likely know by now, well then there is also a catch to this index fund. And it is no surprise that it is the same catch as there was with the previous two index funds. So it is namely that you need to invest a minimum amount of $3,000 and you have to pay an average yearly expense. However, the average yearly expense here is 0.22% because it takes more work to get this one working, because there are much more companies within this index fund than there are with the previous ones. The fourth index fund on my list is the VGIAX. And this index fund is basically offering exposure to all of the dividend-focused companies there is across all industries. The fund is committed to find high-quality dividend-paying companies that are paying very consistent dividends. But they're not only paying consistent dividends, but they are also companies that are expected to increase their dividend payments every single year. So by buying this fund, you actually get a higher and higher amount of dividend payments every year, because the fund is doing whatever it can in order to find companies that are increasing their dividend payments and that are very consistent with paying dividends. Therefore, you do of course get a very high amount of dividend when you own this index fund, but you also have the chance for the stock that you buy to increase in value as well, just like you have with any other stock that you buy. If you had invested $10,000 into this index fund 10 years ago, well then today you would have had around $36,000 without doing any work at all. The catch of this fund is the exact same again, namely that there is a minimum investing requirement of $3,000 and there is also an average yearly expense of 0.27%. That goes to continuing that this index fund are able to find the best paying dividend companies there is. The fifth and last index fund on my list is the VGIAX. And this fund is focusing on growth stocks. Since the fund is focusing on growth stocks that are usually smaller companies, well then it also is more volatile than the other index funds. Therefore, I would not recommend only owning this fund, but having this fund in combination with some of the other 4 index funds might be a really good idea, because this index fund here has the potential to give you extremely high returns. It is one of the index funds that I do invest in every single month, because I do believe the upside to having growth stocks in your portfolio is extremely big. And it is one of the funds that has actually made me the most money. And if you had invested $10,000 into this index fund 10 years ago, well then today you would have had almost $40,000 without doing any work. And the catch here is of course the exact same thing, namely that there is a minimum investment of $3,000 and there is a yearly average expense of 0.22%. However, buying it is definitely recommended because it is one of the best index funds there is. With these index funds, you are being exposed to a lot of different markets, but more importantly, then you also have the opportunity to decide how much risk you actually want in your portfolio. I personally own every single one of these indexes, but the majority of my money is definitely within the S&P 500 index, and it will continue to be so. And the reason is that it is a very, very well diversified index fund, and the companies within this fund are very stable and they're providing a very, very good return. That was all I had in today's video. I hope that you liked the video. If you did, then please press the like button below and make sure to subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.